If you own silver, or you're thinking about buying silver, stop what you're doing and listen carefully, because something subtle but important is happening right now, and most people will completely miss it. This is not a market crash, it's not a price explosion, and it's definitely not something you'll hear about on mainstream financial news tonight. Silver looks quiet, almost boring, and that calm surface is exactly why this moment matters. When markets go silent while pressure builds underneath, that's usually when the biggest shifts begin. Welcome back to Sayfee Metals Health, where we slow things down, cut through the noise, and look at what the data is actually saying, not what the headlines want you to believe. Over the last few days, several major bullion dealers across the United States quietly updated their websites. No announcements, no warnings, just longer delivery times. What normally takes 7 to 10 business days is now stretching into 4, sometimes 6 weeks. That may not sound alarming at first, but if you've followed precious metals for any length of time, you know delays like this don't appear randomly. Before we go deeper, if you care about understanding real market shifts before they become obvious, take a second to like this video and subscribe to Sayfee Metals Health. It helps the channel grow, and more importantly, it keeps you plugged into analysis that actually matters instead of hype and fear. Now, I know what many of you are thinking. We've heard silver shortage stories before. Premiums rise, delivery slows, social media gets loud, and then everything settles back down. And you're right to be skeptical, but this time, the signals underneath the surface are very different. What's happening now isn't being driven by online speculation or retail frenzy, it's being driven by supply mechanics, industrial demand, and global trade behavior, and those forces move slowly but relentlessly. Let's start with the physical market, because physical silver always tells the truth first. Across the retail space, premiums over spot have been creeping higher, not spiking suddenly, but rising steadily. That kind of price behavior usually points to inventory stress rather than emotional buying. At the same time, US Mint silver sales are coming in stronger than expected for this part of the year, suggesting consistent demand rather than a short-term rush. Dealers aren't saying the word shortage, but the longer wait times speak for themselves. When metal is easy to source, delivery is fast. When supply chains tighten, delays show up quietly before prices move. Now here's where things get strange. While physical silver buyers are paying higher premiums and waiting longer for delivery, the paper silver market is telling a completely different story. Large commercial traders and banks are increasing their short positions in silver futures, effectively betting that prices will remain controlled or even move lower. Think about how unusual that is. The same institutions that have the deepest insight into supply chains, vault inventories, and delivery logistics are positioning as if abundance is guaranteed, while the retail market is experiencing growing friction. That disconnect deserves attention. To understand why this matters, we need to step back and talk about how silver is actually produced. Most people assume silver production responds directly to silver prices, but that's not how it works. Roughly 3/4 of the world's silver comes as a byproduct of mining other metals like copper, lead, and zinc. That means silver supply is tied to the health of completely different industries. If base metal mining slows down due to economic pressure, energy costs, or declining demand, silver production slows with it, regardless of how strong silver demand may be. Over the past 2 years, global silver mine output has declined, marking the first sustained drop in nearly a decade. On paper, a 2% decline may not sound dramatic, but in a market that already runs tight, small changes matter, especially when demand isn't slowing down. Industrial demand for silver continues to rise, and this is not optional demand. Silver is essential for solar panels, electric vehicles, advanced electronics, medical equipment, and modern communication infrastructure. Each new solar installation locks silver away permanently. Each electric vehicle uses significantly more silver than traditional cars. This is long-term consumption, not speculative hoarding. According to industry data, industrial silver demand has reached record levels, and there is no indication of a slowdown. Now layer retail investment demand on top of that, and suddenly the supply picture looks very different. But the story doesn't stop in the United States. Some of the most important signals are coming from overseas. Late last year, India imported more silver in a single month than at any point in its history. What makes this unusual is the timing. This wasn't peak wedding season. This wasn't driven by traditional jewelry demand. In a country with more than 1 billion people, even a small change in behavior creates massive demand. At the same time, China is quietly reducing silver exports. Chinese refiners are keeping more silver inside the country to support domestic manufacturing, solar expansion, electric vehicle production, and advanced technology sectors. That silver is no longer flowing into global markets. Once it's absorbed into industrial use, it doesn't return to circulation easily. So now consider what's happening globally. Mine supply is declining. Industrial demand is accelerating. 2 of the largest populations on Earth are absorbing more silver than ever before. And yet the price of silver, as most people see it, remains relatively flat. That tells us something important. The price you see on a screen is being driven primarily by paper contracts, not physical transactions. Futures markets trade volumes that are many times larger than the amount of physical silver that actually changes hands. Most of these contracts are settled in cash, not metal. As long as confidence in that system holds, prices can remain calm even when physical supply tightens. But history shows that when the gap between paper markets and physical reality grows too wide, it doesn't close slowly, it closes suddenly. This is why silver often moves when people least expect it, not during moments of excitement, but during periods of quiet. I want to pause here and ask you a simple question, because your perspective matters. Do you think dealers are genuinely running low on silver right now, or do you think inventory is being held back strategically, waiting for better prices? Drop a comment below and type tight if you believe supply is strained, or strategic if you think metal is being withheld. This kind of discussion helps everyone think more clearly, and I read the comments. Now let's talk about the skepticism, because it's healthy. Many people remember previous silver surges that faded away. Banks stayed in control, prices normalized, and that memory makes people cautious. But those episodes were driven by speculation and short-term demand spikes. What's happening now is different. This is not about squeezing the market. It's about structural forces reshaping supply and demand over time. Energy transitions don't reverse overnight. Industrial build-outs don't stop suddenly. And mine supply doesn't respond quickly to price signals. These pressures build slowly, then express themselves rapidly. That doesn't mean silver is going to explode tomorrow, and it doesn't mean anyone should panic or make emotional decisions. This is not financial advice. But it does mean the silver market may be entering a phase where old assumptions no longer apply. If you already own silver, this isn't a moment for fear. It's a moment for awareness. Understand what you hold and why you hold it. If you're considering buying silver, understand that higher premiums and longer delivery times are part of the current reality. And if you're watching from the sidelines, pay attention to the signals rather than the noise. Markets rarely announce turning points loudly. They whisper first. And right now, silver is whispering. Before we wrap up, if this analysis helped you see the silver market more clearly, please share this video with someone who follows precious metals or is concerned about protecting their savings. It really helps the channel grow and helps others stay informed. Leave your tight or strategic comment below, because I want to know how this community sees what's unfolding. This is exactly why Sayfee Metals Health exists, to track these quiet shifts before they become obvious. Stay calm, stay informed, and I'll see you in the next video.